up on global business. Reviving trade, China has lifted its 24-year ban on Spanish beef imports due to concerns over mad cow disease. Sustained growth, Chinese mainland stocks continue their impressive upward trajectory, maintaining strong momentum as they climb for the 7th straight trading day. Persistent improvement. Eurozone business activity contracts for 9th consecutive month in February, but rate of decline slows. From CGTN headquarters here in Beijing, this is Global Business. I'm Xia Vandenberg. President Xi Jinping exchanged congratulations with his counterpart, Denis Sassou Nguesso, of the Republic of Congo on the 60 years of diplomatic ties. President Xi says the two nations have trusted one another on political and economic fronts amid global changes. He adds that China-Republic of Congo relations exemplify China-Africa cooperation. President Sassou Nguesso welcomed the two sides' common pursuit of peace, fairness, and prosperity. The two leaders pledged to strengthen their comprehensive strategic partnership of cooperation and contribute to building the China-Africa community with a shared future. China is ending a 24-year-long restriction on Spanish beef imports. The embargo was imposed in 2000 due to concerns over mad cow disease. Beijing's Ministry of Commerce says it welcomes more international products to share the fruits of its market. Sun Tianyuan reports.
China has announced the lifting of restrictions on imports of deboned beef from Spain for cattle under 30 months of age. Spain welcomed the decision, saying it is opening up a very important market for its beef. I asked China's Ministry of Commerce about its plans to further promote bilateral trade.
China is willing to continue deepening mutual beneficial cooperation with Spain and welcomes more Spanish companies to continue promoting their products through platforms such as the China International Import Expo, the China International Consumer Products Expo, and the China International Fair for Trade and Services.
Spain has been an important participant in both the CIIE and the Consumer Products Expo over the years. The Ministry of Commerce called pragmatic cooperation a driving force of bilateral relations, adding it would further strengthen trade with Spain to bring about more benefits to people on both sides.
China has now become Spain's largest trading partner outside the European Union. More quality agricultural products from Spain have gone onto the dining table of Chinese consumers. We welcome more countries to enter the Chinese market, making it a shared market for the world.
Over the past 3 years, trade between China and Spain has grown despite challenges caused by the COVID-19 pandemic. Overall volume expanded from $37.9 billion in 2020 to $48.6 billion in 2023. Sun Tianyuan, CGTN, Beijing.
China's holiday consumption boom continues as the Spring Festival draws to a close. Data shows passenger flow in some key commercial districts reached over 80 million during the holiday. That is an 80% jump from the same period last year. The upcoming Lantern Festival is also set to boost consumption as local businesses stage various activities to attract consumers. The surging crowds are also driving up catering consumption. Official data shows that during the first 10 days of the Spring Festival, nationwide daily bookings increased by 25% and catering sector sales rose 32%. The Spring Festival holiday sparked a travel frenzy in China with hundreds of millions of domestic tourist trips made. Tourists spent nearly 632 billion yuan on their holiday trips, and over 16,300 commercial performances were held across the country. However, for those seeking to avoid the holiday travel rush and premium airfares and hotels, their holiday is just beginning. CGTN's Xing Ruinan has more.
The Spring Festival holiday has ended, and many domestic tourists in China are opting to travel off-peak to avoid the holiday rush. Harbin has emerged as a popular ice and snow tourist destination this winter. At a travel agency in Ningbo, Zhejiang Province, local residents interested in off-peak travel came to inquire about trips to Harbin.
If we travel to Harbin now, the air tickets will be cheaper. There are fewer people than during the Spring Festival, and it may be a better experience for us.
According to Ctrip, from February the 26th to March the 30th, there are discounts ranging from 1 to 6% to many of the country's provincial capitals and other cities. Compared with the peak period of the Spring Festival, the price is less than half.
When it comes to price reduction, flying from Beijing, Shanghai, Hangzhou, and other main cities to places like Sanya or Harbin, plane tickets are largely discounted. For example, the price of a plane ticket from Shanghai to Sanya this week fell by more than 50%.
The Lantern Festival is coming this Saturday, and well-known tourist attractions across the country are planning to hold events. The boom in travel is expected to continue beyond. Xin Ruinan, CGTN.
Time for our new series, Smart Cities, Smart Underground, where our reporters delve into the comprehensive underground construction and management in cities to uncover the future trends in smart city development. Shanghai has now more than 40 wastewater treatment plants with a capacity of over 10 million cubic meters, the largest in China. Our reporter Zhang Shixuan finds out how Shanghai has been constructing its drainage system.
Stretching 6,340 square kilometers with 25 million residents, Shanghai uses a lot of water.
I'm now holding a bottle of fresh tap water in Shanghai, and let's see how is it different from the water that's after treatment.
This is a glass of treated wastewater. It may have come from someone's kitchen, bathroom, or toilet. It's clear, and there's no smell, just like a glass of water from the tap. But these are only two of the indicators measuring whether the water is clean enough to be discharged back into nature.
The treatment process is divided into pre-treatment, biotreatment, advanced treatment, and disinfection. Only water that meets the requirements can then be poured into the Yangtze River Delta region.
Every day, 400,000 tons of wastewater is treated at this plant in Shanghai's Baoshan district. But you could pass by and never know it's there. That's because it's underground. Right above it is a large park, the size of roughly 27 football fields.
Our plant is the biggest underground wastewater treatment plant in China that can complete the whole process of regulation and storage. The greening rate at the park above has reached 60%. We also get the light from upstairs.
The whole water treatment process is divided into 5 areas at the plant.
On this level, there are multiple coverings on the floor, but beneath there's another complicated structure. That's where new technologies have an impact.
There are now 19 indicators measuring the water after processing. It will then go back into the Yangtze River Delta region's environmental water system.
We have added indicators for nitrogen and phosphorus, as they are closely linked to eutrophication, which can cause blue-green algae.
Every day, Shanghai's wastewater treatment plants are required to send samples of sewage and water after processing to laboratories for testing. This lab in the city's downtown Putuo district is responsible for testing samples from 1/5 of the plants.
100 years ago, all of the wastewater treatment plants in Shanghai were built by foreigners. This one in Yangpu, for example, was built by the British, and is now the only foreign-built one still standing today. Here you can see the hand scripts and old testing tools, as these days it's more like a museum. But now, all wastewater treatment plants in Shanghai are developed by Chinese. The number of water pipes and water treatment plants in Shanghai has increased significantly.
Shanghai now has 28,297 kilometers of drainage pipes, longer than the Great Wall.
Shanghai now has 43 wastewater treatment plants with a capacity of 10 million cubic meters, the largest in China. Putting wastewater treatment plants underground is an emerging thing in recent years in China.
Xiao said though building an underground wastewater treatment plant costs more and requires higher operation costs, The better environmental outcomes make it worth the investment. Zhang Shixuan, ICS for CGTN, Shanghai.
As part of its focus on innovation, China is developing what the government calls new productive forces in the economy. To support this, Huawei and Vessel, two prominent Chinese companies, have teamed up to introduce a fully intelligent house on wheels. Our reporter Zhu Zhu has more.
Guess where we are? Well, we are not in a hotel. This is an intelligent RV model presented by Weisu and Huawei. Chinese tech giant Huawei has partnered with outdoor mini hotel provider Weisu or Vessel to showcase this smart residential project. With Huawei's high-powered SUV as the trailer and the company's advanced software and operating system, this RV can be fully intelligent. Connected with Huawei's Harmony OS 4 software system, you can have intelligent control of the entire room. 关窗帘
我们现在跟它已经实现一个叫车家互联的这样一个状态。
Huawei's in-car intelligent control system and our applications on mobile phones and computers can remotely control all smart electrical equipment in this room.
Some may worry about the energy supply of this RV. Wang said that this model can provide energy for itself via solar.
你可以看到，已经我们布上了这个太阳能电池板。
We have installed solar panels on the roof of these rooms, and the daily electricity consumption of the warehouse requires about 30 square meters of solar panels. Therefore, we have also designed the shape of the RV with extended wings, which can enable the RV to achieve self-sufficiency.
用这个户外的遮阳避雨的一个空间，另外一方面，它可以有更大的面去接收这个太阳能。
Unveiled last year, the maximum towing weight of Huawei's Idol M9 large-size SUV is almost 1.5 tons. It is capable of towing this RV. But so far, the chassis needed to tow this intelligent room for private cars has not been launched yet. Wang said it is expected to be invented by the end of this year, as they found there are already large number of demands from overseas markets, such as the US, Japan, and Thailand. Zhu, CGTN, Foshan in Guangdong Province.
You're watching Global Business, still to come. Chinese mainland stocks continue their impressive upward trajectory, maintaining strong momentum as they climb for the 7th straight trading day.
Strengthening the foundation for a future powered by innovation, where high technology, high efficiency, and high quality converge. These three pillars are set to propel China's new productive forces and supercharge the Chinese economy into a new era of development, new industries, new models, and new growth momentum. Join CGTN as we guide you through the new productive forces poised to redefine the Chinese economy.
Chinese mainland stocks continued their impressive performance on Thursday, marking their 7th consecutive session of gains and coming close to recouping the losses incurred in January. Both the Shanghai Composite and the Shenzhen Component closed more than 1% higher, maintaining their upward trajectory observed since the beginning of this week. Investors seemed reassured by a growing list of supportive measures announced by Chinese officials, which primarily focus on stabilizing market volatilities and boosting returns on equity investments. And now for more discussions on the recent surge in share prices on the Chinese mainland, we're joined by Chen Jiahe, Chief Investment Officer of Novum Arcade Technologies. Good to see you, Jiahe, and Happy New Year. So first, what factors do you think are driving the recent surge in share prices on the Chinese mainland?
Hi, Happy New Year, Michelle. Well, recently we have saw a large rally with the Asia components from its bottom that appeared before the Spring Festival. The Shanghai Composite Index has rebounded by over 13% in just 7 trading days. And for all these 7 trading days, the index has been rising. So that is a quite remarkable rebound. Talking about the reasons behind this rally, there are two things that we should consider. First of all, the most direct reason behind this rally is the low valuation. Before this round of rally, the market has been dropping for quite a while, and the valuation of the market has achieved its historical low level. I checked with several indices like Shanghai Composite Index, Hang Seng Index, etc. Most of their valuation before this rally are the cheapest in their own history, or at least close to the cheapest level. So this is always how the market works. The low valuation and the poor performance will be followed by a large rally. The second reason is that the Chinese economy is very stable. The economic growth is above 5% for last year, and the consumption boom in the Spring Festival has given people more confidence. So with a good economy and a low valuation, to me it seems like a perfect chance to buy.
Now, in terms of sectors or industries, what are you following this year?
Well, this is a very good question. For experienced investors, buying the index alone is not enough. You have to pick the right sectors, industries, and companies. And the theory of value investment tells us that we should try to find companies that are both good in their business and cheap with the stock price. Bearing these two elements in mind, looking at all the Chinese equity markets, including the Shanghai, Beijing, Shenzhen, Hong Kong stock exchanges, here are some names of the sectors that I'm currently interested with. That include banks, especially large banks that have stronger financial statements, ports, especially those ports with high return on equity, also companies such as highway, medical production, wind power, automobile, elevator production, logistic, computer chips, etc.
Now, I guess the question everybody's looking for is, what's your outlook for the capital market this year? Will this bull market continue?
Yeah, that's a very, very good question, and everyone is interested with that. Up to today, I've already made about 8% from the market this year. Companies with good price and quality has actually been performing pretty well, amid this fluctuating market. So it looks like a good start of the long year. Look at the benchmark index of Asia, the Shanghai and Shenzhen 300 index. It has been dropping in the past 3 years, and its valuation is now at a record low. Its PB ratio is now less than 1.3, but just 3 years ago, its PB ratio was close to 2. So buying at this time is not a bad idea. Furthermore, judging from the performance of last year and this Spring Festival, the growth momentum of the Chinese economy is still strong. So there can be more confidence generated by the economy in the next few months, which will give the market more support.
All right. Thank you so much for your insights. Always great to have you on the show. Chen Jiahe, Chief Investment Officer of Novum Arcade Technologies for us. China's bond market continues to attract foreign capital amidst the volatile global economic landscape fueled by its impressive growth trajectory. According to the State Administration of Foreign Exchange, overseas investors have been actively purchasing Chinese bonds from September to December 2023, resulting in a net increase of over $60 billion in holding. This surge indicates the growing popularity of RMB assets. China's Bond Connect program allows RMB treasury bonds and financial bonds issued by policy banks to be listed as eligible collateral, enabling existing overseas institutions to engage in repurchase transactions. By the end of 2023, the value of Chinese bonds held by overseas institutions reached 3.72 trillion yuan, or about $523 billion, representing a remarkable 340% increase prior to the program's launch. China's robust economic momentum and ongoing efforts to enhance market openness continue to attract overseas institutions. According to a research report by Standard Chartered, a positive outlook for the RMB and its expanding international usage are expected to drive increased foreign inflow to China's onshore bonds in 2024, resulting in a rise in foreign investor participation. You're watching Global Business, still to come. Eurozone business activity contracts for a 9th consecutive month in February, but rate of decline slows.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
Eurozone business activity contracted for a ninth consecutive month in February, but the rate of decline slowed compared with the previous month. The HCOB Flash Eurozone Purchasing Managers Index rose slightly from 47.9 in January to 48.9 in February. A figure above 50 indicates expansion, while one below shows contraction. The latest rating recorded the smallest rate of decline in the past 9 months. The PMI for the manufacturing sector came in at 46.1. Economists believe the Eurozone economy is heading for recovery. The latest PMI for the services sector came in at 50, its first expansion since July 2023. However, economists remain concerned about the bloc's largest economy, Germany. German composite PMI came in at 46.1 in February, the lowest level in 4 months. Now, many countries across Europe released their latest CPI data on Thursday, and for more on that, let's cross to our correspondent Alex Cartier in Brussels. Hi there, Alex. So, what do the latest CPI stats reveal about Europe's inflation crisis?
Well, some economists feel that it reveals a sign for hope and signs that things might be slowly getting better for the European economy. Now, if you look at those numbers that you've just laid out, it is still a contraction in February. So the fact that a contraction is seen as potentially a sign for hope tells you a lot about how the European economy has been performing over the last few months. We've also seen other indicators showing particularly inflation is down to levels it hasn't been for a very long time, showing that there might be signs for hope. We know, as you mentioned, that Germany is a real concern. The German economy is not where the German government wants it to be, but some countries have outperformed expectations. You're looking at Spain and France and Italy have done better than expected in a lot of these indicators as well. So certainly not where the European economy would like to be, where those European leaders here in Brussels would like to see the European economy, but certainly those signs for hope slowly but surely closing in. It is still a contraction, but it is closer to growth than the EU and the Eurozone have been for a very long time. So certainly hoping that this may be perhaps the last month before we see growth again in these indicators.
Yeah, so speaking of growth, is growth or the lack of growth still a concern there?
Yeah, it's a huge concern. It's going to be one of the biggest concerns for European governments, for the European Commission here in Brussels, looking at the economic forecast. The European Commission in that building behind me actually changed its forecast, its winter forecast for growth in the Eurozone, in the European Union, bringing them down for 2024 to 0.9% in the EU and 0.8% in the Eurozone. Now, that sounds very low. It is very low, but certainly it's better than what had been predicted just over a year ago at the start of Russia's invasion of Ukraine in particular. There was an expectation that the EU and the Eurozone would be in a recession by this point. So the feeling is that that growth is low, but it is certainly better than being in a recession. Those forecasts for 2025 will be 1.7%. Now, the only positive indicator we have is inflation, down to 2.8%. You'll remember that in October 2022, that was 10.6%. So maybe if inflation stays down, if inflation continues to drop, the European Central Bank could lower interest rates. That could stimulate growth, and hopefully the picture could be a bit more optimistic in the future.
Yeah, definitely. Thank you so much for your update, Alex Cartier, for us in Brussels. Farmers drove their tractors into central Madrid on Wednesday as part of ongoing protests against European Union and local policies. They're demanding measures to alleviate production cost increases. Ken Brown reports from the Spanish capital.
Protest convoys and roadblocks disrupting traffic and food deliveries, mirroring those around Europe and other parts of the world. Farmers are calling for fair prices for their produce in the face of rising costs and argue there is too much bureaucracy and too many environmental regulations. They say foreign imports, particularly from Morocco, have an unfair advantage that they don't have to play by EU rules.
They don't demand the same standards in products coming from Morocco. That's unfair trade. We want the EU to ensure a level playing field. We personally don't want them to allow us to use harmful fertilizers.
Tractors on the streets of Madrid are making their presence felt, while over the past couple of weeks we've seen trucks with Moroccan tomatoes attacked in the south of the country, in Granada, in the north. Ports of Tarragona and highways connecting Spain and France have also been blocked.
Next Monday, the minister will be in Brussels working on behalf of the main demands the farmers are seeking, like the simplification of the common agricultural policy, which is crucial.
Wednesday's protests in Madrid come as Prime Minister Pedro Sanchez is in Rabat, where he's meeting King Mohammed VI. Meanwhile, the farmers continue to make their voices heard with thousands of others around Europe and the world. Ken Brown, CGTN, Madrid.
In Switzerland, the city of Basel kicked off a 3-day carnival with a history dating back to the 14th century. The Carnival of Basel has been inscribed in UNESCO's list of intangible cultural heritage. Julia Lubova joins the festivities and tells us more about its unique traditions.
The city lights have been switched off. At precisely 4 in the morning on a Monday, a tradition known as the Morgenstreich marks the beginning of the carnival in Basel. On this night, the only light in central Basel comes from the lanterns carried by revelers. They march through the city playing music with piccolos and drums. They are dressed in a variety of costumes, with themes ranging from political to satirical or related to current affairs.
It's against racism. It's an old costume. The theme was against racism because pandas are black and white.
After a short sleeping break, the city streets come alive with a loud and colourful parade. Some 18,000 people take part in the traditional Monday cortege. The participants march in formations known as cliques and floats, featuring different themes, wearing bright costumes and caricature waggies masks, portraying farmers who in a distant past brought produce to Basel markets. They throw oranges, sweets, flowers and gifts at the crowd and shower bystanders with confetti.
When you grow up in this region, that's you're born with that gene in yourself, right? So those are the 3 days where you can free yourself up. You can forget about the stress you have at work and be free and just enjoy, right? And have fun. And also giving sweets to the kids and so on, so putting a smile onto someone's face.
The carnival in Basel is one of the largest and oldest in Switzerland and is attended by thousands of visitors from all over the world. The young and the old go wild on the streets of Basel for 72 hours until exactly 4 a.m. on a Thursday.
The Carnival in Basel is one of the top local festivities in Europe and attracts thousands of people every year for its atmosphere. Since 2017, the Carnival of Basel has been included in the UNESCO's Intangible Cultural Heritage list. It is equally special for every local and every visitor who takes part in the celebrations. Julia Lubova, CGTN, Basel, Switzerland.
And that will do it for this edition of Global Business. I'm Xia Vandenberg in Beijing. Thank you for watching. Bye for now.